Euro just ripped above 1.1500. The GDP number surprised everyone. But here's what nobody is talking about. Friday's NFP could absolutely destroy this move. I've got 3 specific setups for this week, including a scalp at 1.1450 that targets 1.1580. Watch the full breakdown now on Alpha Market Meridian. Listen up. Euro just blasted through 1.1500, and I'll be honest with you, I've been waiting for this exact move since last month's GDP whisper number started circulating. But this week? This week is where the real battle begins. We've got a soft NFP expected on Friday, and the smart money is already positioning. I've seen this exact setup before, back in the summer of 2022, when the market front-ran a weak jobs number and then got absolutely obliterated on the actual print. That's the trap this week. And I'm going to show you exactly where I'm positioned, where I'm scaling in, and where I'm getting out. My bias is bullish above 1.1450, bearish below 1.1400. Simple. Clean. That's your invalidation zone. If we lose 1.1400 with conviction, this entire narrative of euro strength collapses. But as long as we hold that level, I'm looking for a run toward 1.1620 and potentially 1.1650 by Friday's close. This isn't a guess. This is based on price structure, momentum, and a clear fundamental divergence that I'm going to walk you through. Now watch closely, because this is where it gets interesting. Let's start with the monthly chart. This is the big picture. August is historically a strong month for the euro due to seasonal structural recovery cycles, and we are seeing that play out in real time. Price is trading at 1.1528, well above key structural levels, and the monthly trend is distinctly bullish. What stands out to me is not just the price action, but the fact that we are consolidating above the 52-week structural baseline at 1.1325. That's a level I've watched for years, and when price holds above it, you have to respect the bullish case. Now the weekly chart reinforces that view. Strong momentum continuation above structural baselines. We've had 3 consecutive weekly closes above the prior week's high. That's a genuine momentum signal. The daily chart? Strong buy. Price is consistently compressing above key moving averages. And here's the specific data you need to know. The 5-day MA sits at 1.1512, the 10-day at 1.1485, the 20-day at 1.1450, the 50-day at 1.1420, the 100-day at 1.1490, and the 200-day at 1.1510. You see that? Every single major moving average is stacked under price. That's a bullish alignment. RSI sits at 64.20. Strongly bullish with remaining room to run before hitting overbought boundaries. I don't care if RSI hits 70, I care about the velocity and the price action around those levels. The stock reading at 78.10 is compressing upward inside positive momentum channels, and the Williams %R at -21.40 is firmly within the upper bullish recovery zone. The ADX reading at 26.40 indicates a firm, strengthening trend cycle. Anything above 25 signals trend strength, and we are right there. This is not a market that's directionless. This is a market that's quietly building momentum for the next leg higher. The ATR at 0.0072 shows slight expansion, matching incoming top-tier risk parameters. In plain English, volatility is increasing. That tells me the market is preparing for something big. Now the 4-hour chart. Bullish local upward continuation targeting high liquidity zones. Price is compressing just below 1.1580 resistance, and I've been watching this area closely. I've seen this exact compression pattern in the 4-hour chart 3 times in the past year. Twice it led to a breakout that ran 200 pips. Once it faked out and reversed 150 pips. The tell, in my experience, is the reaction around the 1.1580 level. If we break it with a strong bullish candle and follow through volume, that's your confirmation. If we reject hard and reverse below 1.1500, that's your red flag. The 1-hour chart is neutral to bullish. we are seeing minor short-term consolidation directly under resistance. This is where the day traders live, and it's often the most misleading time frame. I'll tell you what I'm watching here. The hourly RSI is holding above 60. That's a sign of underlying strength. If it dips below 55 on any sell-off, I'd be cautious. Now here's where we get to the real meat of this week's analysis. The euro held structurally firm above 1.1500 following a 0.4% contraction defying expansion in Eurozone Q2 GDP. I'll repeat that. Because it's important, contraction defying. The consensus was for a flat print at best, and instead we got actual growth. That's a massive beat. Concurrent global safe haven flows out of the US dollar are compounding the upward momentum amid localized geopolitical conflicts. That's the fundamental tailwind, but here's the calendar. Day 1 to 2, we've got US ISM services and manufacturing PMI releases. These are key growth forward indicators. A weak ISM print will validate the US economy slowing narrative and likely push EURUSD higher. A strong print could cause a short-term pullback. I'm expecting soft data, but I'm also prepared for a surprise. Day 3 brings Eurozone Retail Sales and ECB economic bulletins. I don't expect anything major from the ECB, but the retail sales number could move the pair 30 to 50 pips depending on the deviation. Then we come to Day 5. Non-farm payrolls and unemployment rate. This is the premier macro driver for this week. The market is expecting soft at 91,000. What stands out to me is not the headline NFP, but the 10-year yield reaction. That's where the smart money is watching. If yields fall significantly on a weak number, the dollar will sell off and EURUSD will explode higher. If yields don't react, or worse, rise on a weak number, that's a sign of stagflation fears and the euro could get caught in the crossfire. Here's my personal perspective on this calendar. I've been through enough NFP weeks to know that the market typically positions aggressively. Into the data. If we see a continued push higher into Wednesday or Thursday, that's the market front-running a weak number. Then the actual number becomes a sell the news event regardless of the print. I learned that lesson back in August 2022, when the market front-ran a weak jobs number and then got hammered on the actual print. That exact dynamic is at play this week. Let's get to the setups. I've got 2 scalps and 1 swing for you. Setup 1, scalp buy. The breakout play trigger at a daily close above 1.1580 with momentum, entry at 1.1585, buy stop loss at 1.1540 TP1 at 1.1620 TP2 at 1.1650 R and R is 2.8:1, based on TP1 risk, invalidation. Failure to hold above 1.1580 within 4 hours of breakout. Setup 2, scalp sell, the rejection play trigger. A clear rejection at 1.1580 or 1.1620 with bearish candlestick pattern, entry at 1.1575, sell limit, stop loss at 1.1615 TP1 at 1.1525 TP2 at 1.1490 R&R is 2.2:1 invalidation, break above 1.1625 with strong momentum. Setup 3, swing trade. The trend continuation trigger at price breaks 1.1580 with conviction OR pulls back to 1.1450 support, entry at 1.1450, buy limit, OR 1.1585, breakout. Stop loss at 1.1390, if buying at 1.1450, TP1 at 1.1620 TP2 at 1.1720, projected extension, R&R is 3.8:1 invalidation. Daily close below 1.1380. Here's a personal insight for you. I'm already positioned with a small long from 1.1460. I'll be adding to that position if we see a clean break of 1.1580. My intention is to hold into Friday's NFP, but I'll be trailing my stop aggressively. The market has a habit of shaking out weak hands before a big move, and I've been burned before by getting stopped out prematurely. This time, I'm using a wider stop and scaling in. Risk management isn't just about stop losses. It's about position sizing, correlation, and understanding the volatility context. With ATR at 0.0072, a 40 to 50 pip stop is reasonable, but you have to factor in spread and slippage. I never risk more than 1% of my account on any single trade. I've had weeks where I was down 5 consecutive trades and still ended the week profitable because I kept my position sizing consistent. The difference between professional traders and amateurs? It's not the setups, it's how they handle the losing streaks. I can tell you from personal experience, some of my best months followed my worst weeks. You have to trust your process and keep your risk parameters intact. Let's wrap this up. EURUSD is bullish above 1.1450 with targets at 1.1620 and 1.1650. The fundamental story supports the move, but Friday's NFP is the wild card. I'm watching the 1.1580 level as the key breakout trigger. That's the line in the sand. If you found value in this analysis, drop a comment below with your bias for the week. Are you buying the euro or fading it? Let me know your levels. And if you haven't already, hit that subscribe button. I'll be back Friday with a live NFP reaction video, and Sunday with the full week ahead for all 8 assets. This is Alpha Market. Meridian. Stay sharp, stay disciplined, and I'll see you in the next one.